Bloomberg Audio Studios.
Podcasts, radio, news.
Let's turn to the Federal Reserve. Traders looking ahead to the Fed minutes this week and a rate decision at the end of the month. The former New York Fed President, Bill Dudley, calling for the central bank to improve its communication, writing, "The better the quality of the Fed's communication, the more accurately market participants can assess how policy is likely to change. This tightens the linkage between monetary policy actions and financial conditions, which increases the speed and precision of monetary policy transmission." Bill joins us now for more. Bill, welcome to the show, sir, and a very happy new year to you. Where do you think the Fed is struggling to communicate right now? On what issue specifically?
I think the summary of economic projections last month was confusing to people because there was a pretty big upward revision to the inflation estimates for 2025. Yet it was hard for Powell to explain the sources of that. He noted that the participants don't operate from a common set of assumptions. Some were assuming effects of Trump tariff and deportation policies, some weren't, and some didn't say whether they were or weren't. So each of the projections has a different set of assumptions embedded in it, which makes it very hard to anticipate what the Fed thinks is going to happen and how they're going to react to it.
Bill, is the issue for the Fed right now communication or just not necessarily understanding which direction this economy is going to go in?
Both. I think the problem is they're having trouble communicating how they're likely to react to the Trump policies. Obviously, if tariffs are broad-based, that is one effect. If they're much more targeted, as the Washington Post report suggests, that has a different implication. So there's a lot of uncertainty about what Trump policies are going to be. And of course, the Fed is, uncertain about how the economy itself is going to perform. A key issue for the Fed in terms of the economy is the labor market going to continue to weaken or not? Powell has been very clear that he thinks the labor market is still weakening, and he doesn't want it to weaken any further. So that's why Friday's payroll employment report is so important.
When you talk about a reaction function, this has been one of the big quagmires for people. What is sort of the scenario analysis that the Fed is doing and how they're going to respond to it? Do you think that they have that scenario analysis, or do you think that increasingly by default it is becoming an increasingly data point dependent Federal Reserve?
Well, there's definitely scenario analysis that takes place before each meeting. The staff prepares what's so-called teal book, and in the teal book there's a baseline forecast, but there's also these alternative simulations which suggest how the economy might evolve if things happen differently. I think that's another problem with the summary of economic projections. It's a modal forecast. It doesn't talk at all about what's going to happen if things turn out differently than what Fed officials expect. So I think one thing the Fed could do is actually do what a lot of foreign central banks do, is actually have a consensus forecast. Difficult to do with a committee with 19 people spread all over the country, but you could actually start to publish the staff forecast. There is a staff forecast available before every meeting, and if you put that out there, you'd have a better sense of, what the baseline assumptions of the Fed are.
But Bill, isn't one of the issues that comes problems is because they don't want to or can't be seen talking about policy? Do you just think the Fed should be more open about policy, all of the members?
Well, clearly what happens on tariffs and deportation is going to have a big effect on the economy in 2025. So I don't think you can avoid, thinking about that in terms of making your economic forecast. I think the Fed is reluctant to talk about it because he doesn't want to get itself engaged into this political discussion. And I think they're worried that will politicize the Fed. So they're trying to think about it without talking about it at the same time.
Is your main concern right now with the Fed communications, or would you do anything differently on policy?
I think they are in a pretty good place right now. I think that they understand that the economy is doing okay. Inflation is a little bit sticky, so it makes sense to wait. They also understand that there's a lot of uncertainty about what policy is going to be forthcoming. And Powell said when things are uncertain, you should slow down. So I think that all makes a lot of sense. I think the big disconnect, between markets and the Fed is where is the Fed heading over the medium to longer term? The Fed says we're heading to 3% federal funds rate. The market says we're heading to something more like a 4% federal fund rate. So there's a pretty big gap about what is a neutral monetary policy. The Fed thinks the neutral monetary policy is quite a bit easier than we are today. The market thinks that the neutral monetary policy is slightly easier than where we are today.
Bill, what did you do with your own forecast when you had Trump coming in Volume 1? How did you change things? Did you anticipate the changes to policy beforehand or react once it was introduced?
I think I thought that there was more risk in the forecast. So I think the biggest change for me was to talk about risk and uncertainty going up. And I think that's what's happened today. I mean, I think the big transition from Biden to Trump is under Biden, we sort of knew exactly what the policies were. And in fact, over the last 2 years, there hasn't really been much in terms of new policy initiatives. Now we're going into the Trump era, and we know there's going to be a lot of changes in policy, and we don't know yet what they're going to be. So I think we're going from a period of low uncertainty to much higher uncertainty. And that's what's got to get priced into markets. That's one reason why I think the bond market has done poorly over the last few months.
Bill, appreciate your time. As always, Bill Dudley there, the former New York Fed president, looking out to 2025 and beyond.